Staying in the real estate sector as housing prices are on the rise. The average home price for the 4 weeks ending April 14th, just over $380,000, a nearly 5% increase over the last year, and just about $3,000 short of June 2022's all-time high here. That data according to Redfin. So now, what do the costs and rising costs in housing mean for your dollar? Joining me now is Mark Fleming, who is the first American chief economist here. Great to have you here on the program with us. That's a lot of data that we just rattled off to our folks. We know that you track it all, though, as the chief economist. And as we're continuing to think about what the moderation in prices signal about demand right now, I wonder what you're extrapolating from this data.
Well, the actual rise in mortgage rates has a demand side effect. Obviously, it makes homes less affordable. You can't leverage your income as much to buy the house. But at the moment, it's also affecting the supply side, and that is those existing homeowners and their willingness to sell. And so the dynamic of their willingness to sell, because it costs a lot if you give up the low mortgage rate that you already have, is restricting supply. So rising rates restrict supply. They also restrict demand. The net effect isn't necessarily falling prices or rising prices. It's at this point basically a cooling of the amount of volume, as we saw in the home sales report today, less homes being sold. But prices are probably still going to keep going up at somewhere around the 5 to 6% range because of the interplay between demand and supply.
Certainly. What is it going to take, do you believe, for more supply to come into the market?
Well, one thing that would help would be getting rid of this higher for longer world of mortgage rates, right?
Yes.
Because as it restricts both supply and demand, lower rates would incent supply and incent demand. But other than that, I think the broader good news is people buy and sell homes, and people in particular sell homes for many more reasons than just the financial effect. So while it might cost them financially to give up that low mortgage rate, we have seen increased supply since last year, modestly, because people move for other reasons: death, divorce, change of jobs, bigger home, things like that. And the longer we sort of stay in this higher rate environment, the more those kinds of things become the important driving factor for people moving.
Yeah, certainly. And all things considered, with the higher for longer that we've continued to hear. And I was just taking a look at the CME FedWatch probability, especially as it relates to when they will cut, or when they may cut, or when the markets are expecting to cut. And if you had asked many of those who were looking at this figure a month ago, we would have seen that the markets would have anticipated that we would see 2 cuts by September. But that's changed dramatically, and now the first cut that we're firmly expecting to see is by September. So all of that considered, if we do see less cuts than anticipated, how does that create a kind of longer supply side dynamic within this market as well?
Well, if you go back to December, I think people were drinking too much eggnog. They thought it was going to be 6 or 7 cuts this year.
It was good eggnog, all right?
Good eggnog,
Don't
right?
hate us for it, Mark.
Clearly off the table. We're talking about maybe 2 cuts. And honestly, what if there were no cuts? And that just means the status quo. Everyone gets used to this rate environment. And honestly, a 7% mortgage rate, while we think it's astronomically high relative to recent years past, that's actually much closer to the normal for a mortgage rate historically.
While we have you here, Mark, moving over to the rental market, what trends are you seeing right now?
Well, there is some good, modest news in the rental market because so much rental has been built in the last couple of years that's all coming to market this year. So we have sort of a supply glut. That's not the problem in the existing market, right? Here, a lot of supply is coming to market in some places, and that's really putting a damper on rent growth, which means essentially, if you want to get into renting, now is a pretty good time because there's going to be excess supply relative to demand. And that's not going to last, because as household formation picks up again in the coming years and that supply gets all absorbed, we're going to get to a tight market again. So the supply demand dynamic in multifamily is actually quite good right now.